So, yo, what's up for you guys watching this on the YouTube replay? We're just going to be looking at a bunch of stocks, looking at my portfolio, see how the market's doing. Actually, every stock in our Robinhood account is green on the day right now. Every single one. We're seeing a little bit of a drawdown, but we're still up 2.6% on the day. Same with our Roth IRA. Yo, our Roth IRA is up 2.82% on the day. I mean, still, if we go to year to date, I mean, we're still down near 12% year to date. But hey, that's actually not that bad. We're down 11.92% year to date. And if we go to the S&P 500, they are down 12.5. So we're pretty much in line with the market there. But let's go also check out our Mumu portfolio on the day. So we're up 2.72% in here. And yeah, here are all the stocks that we own in here. And actually, every stock in here is up on the day. So that's actually some, oopsie. Did not mean to do that. Sorry. Yeah, every single stock is up on the day in here as well, which is pretty cool. So yeah, um, I guess we'll see how today goes, and then we'll also check out our Weeble portfolio. Let's see. Well, let me check out the watch list real quick. So it looks like Carvana's up 12, Grab, CVS, Broadcom is up 7%. They had some new buyback program. What's down today, I wonder? So Wayfair's down 8, WeRide's down 7. Dang, dude, that company just partnered with Nvidia. Enphase Energy. Hey, this is a stock that I do own as well. Um, if we go to Enphase Energy right here, this is like a solar stock. I do own 7 shares of this company, and this company really isn't too quality. I mean, look at how the stock is done. I mean, this used to be a $300 stock, and now it's $50. That's because their net income has literally collapsed. Like this is when I was buying the stock originally. Like they were making so much net income, but now it's kind of fallen off a cliff. So anyway, yeah, that's Enphase Energy. Oh wait, was that Papa John's Pizza? Yeah, so here's another stock that's kind of going bankrupt. This is a little sad. So check out Papa John's Pizza, ticker symbol PZZA. They are at a multi-year low today. So if you've heard of Papa John's Pizza, they're only worth $1.1 billion. So Papa John's Pizza is now like a really small company, especially when you compare that to like a McDonald's, McDonald's, what's their market cap? McDonald's is worth can't find it. $219 billion. So yeah, McDonald's is a huge one. They're kind of recession resistant as well, which is pretty cool. Yeah, if you guys got any stocks you want me to look at, let me know in the chat. We'll check them out here. So yeah, here's my main taxable account on the day, and here's my total percent change on it on every stock. So we're still down like 7% on Google, 7% on CEG, but yeah, we are seeing a nice little recovery the past week here. Well, start off the week we were at 21.2, and now we're basically right at 20. So yeah. Anyway, yo, what up, Catherine? How's it going? Yeah, hey, thanks for showing up to the YouTube stream. Yeah, we're streaming on YouTube and TikTok right now. Today's a recovery day. Yeah, today's doing pretty decent. If we go look at our watch list right here, literally everything's up. Nothing's down. S&P 500's up 2.4, Q's up 2.8. So doing pretty good. Hey, someone said Verizon stock. So let's check out VZ. That's like a nice dividend play. So if you're looking for like a higher yielding stock, check out ticker symbol VZ. Yeah, so here's Verizon right here. The thing is, you're not going to outperform the market owning Verizon because the stock is kind of flat since 2018. But what you do get with Verizon is this qualified 6.3% dividend yield. So you get the nice little yield. And it's a pretty safe payout ratio as well. I know they have like a lot of debt, but still, I like them. Yo, Sham said opinions on Tesla. Yeah, I'm going to give you my honest thoughts on Tesla. There's some good news and bad news about Tesla. So we all know that they have a really high valuation. Tesla's trading at 120 times net income, which they can have a high valuation if they were growing, but check this out. If we look at their total vehicles delivered, it's actually down 13% year over year. Actually, if we just go to their automotive business right here, the automotive sales are literally down 5% year over year. So unfortunately, Tesla lost their growth and they have a high PE ratio. So they're definitely not going bankrupt though. They're making a lot of net income, like 1 to 2 billion a quarter. But the valuation, in my opinion, is just a little too high for me to buy this one. But it's also Tesla. It should always trade at a high valuation. Yodos Harris said CTO stock. What's this one? So CTO Realty Growth. Oh, this is a real estate investment trust. So this is one of those companies that have to pay out most of their income in the form of a dividend by law. So if we look at this 8.7% dividend yield, it's actually normal and sustainable because they're a REIT. And if we go to this right here, yeah, income properties. So yeah, they own a bunch of real estate, obviously. Look at the growth here of their income properties. Now, this is really impressive. It's up 20% year over year. So that's probably why this one is up since 2019. It has had some nice growth and it has a nice dividend yield. Again, um, They pay an unqualified dividend. What is CATX? What's up, dude? So yeah, if you look in the top right, this one looks a little risky. This whole company is worth $132 million. So this is a very small company. It seems really risky. What do they sell? Uh, I can't even pronounce that. Brachytherapy. So they don't really have any revenue. So look at this. The revenue was 300,000 in the most recent quarter, and they literally lost 40 million of net income in the most recent quarter. So they lost 40 million, and the whole company's worth 130 million. So that one's ooh. Yo, what up, Teleprez? Put some money now. I'm happy. Hey, that's what's up, man. What do you think about tomorrow in the market? What up, Gabe? So yeah, honestly, well, the market's open right now, so I hope tomorrow's green. I mean, we've had a nice little recovery today. Look at this. Literally every stock that we own is green on the day in here, which is pretty cool. Low PE ratio. Hey, what up, pockets? Look at Google stocks. So yeah, Google. That's one that I do own in my Robinhood portfolio. And I'm going to show you why, in my opinion, Google's a no-brainer. Just buy and hold this one for the long run. Again, not financial advice, but yeah, you're right. Look at the super low PE ratio on Google. It's literally an 18. So Google's trading at 18 times net income, and the net income's growing. Everything about this company's growing. The sales are growing, the net income's growing even more, which actually means they're expanding their net margin. So their net margin grew 15%. They own so many businesses. Google owns Android, they own YouTube, they have their Google Cloud. Like, look at just their Google Cloud revenue. It's at a new record. So they own Waymo. They have their own quantum chip. Google, in my opinion, is just such an innovative company. Yo, what 1-5? What up, dude? Thanks so much for the little rose there, for the finger heart. I really appreciate you, my friend. Yeah, good morning. Can you check out Fortnite inflation? Hey, Fortnite is actually owned. This is funny story here. If we go to the Chinese stocks right here, Tencent, this stock right here owns 51% of Fortnite. So 51% of Fortnite is owned by Tencent, this stock right here. They also own PUBG. If anyone's heard of PUBG before, it's like a battle royale video game. They also own that. I went out putting more since I did a lot this month. Hey, yeah, yeah, nice little dollar cost average. Trump announces county tariffs. Do you think it's kind of risky? It is risky. So I don't know. Last time he announced the tariffs, which class for Meta would you recommend? There's only one class of Meta. I think you're talking about Google. I own GOOG, right here, 16 shares in them. But hey, if I don't think you're talking about Meta, but I also do own 4 shares of Meta. We can analyze them if you want. Ooh, here's a stock I also own. I'm down bad on this stock right here, but let me tell you why I really like AMD, and I do own this one. What? Oh, hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. It's free. But check out this. Look at the cool thing about AMD. They have a 17% PC GPU market share, which is huge. But mainly, I like AMD as a data center play. Check this out. The data center revenue on AMD is up 69%, literally to a new record. So incredible data center growth. Same with like the client revenue, that's up 58% year over year, and that's a huge chunk. That's also 27%. The free cash flow was over $1 billion in the most recent quarter. The operating profit was at a record, and they have no net debt. Look at this monster balance sheet. And let me go ahead and show you my position in AMD. Oh yeah, we were just looking at Papa John's Pizza. They're going bankrupt. Very sad. But anyway, here's AMD right here. Yeah, you can see our cost basis. Our cost basis is at $124 a share. So yeah. I might be biased, but I do own them. Ooh, this is a really cool company. Someone said thoughts on FICO, but Amazon, Google, Amazon, Google, or Meta. I'd rank it Amazon, Meta, Google, but I own all three of them. I might be biased, but anyway, here's FICO. Has anyone heard of like a FICO score? Now, this is such a cool company. They have so much pricing power. So look at their FICO scores. You've probably heard of this before. It just grows at a very impressive rate. And whenever you're applying for a loan or like a house or a car loan or whatever, it's like a few dollars for the FICO score, and they have pricing power for it. Anyway, they're just an incredible growth company, in my opinion. It's a very cool company. The valuation's a little high, but they're quality. Nvidia's better. Hey, we can also Tencent also owns Riot Games and Supercell. Does it really, String? I actually don't. Do they really own Supercell? They own Clash of Clans? That's actually really cool. So wait, I don't know if this is right, but someone just said Tencent Games here owns Riot Games, and they own Supercell, which is like Clash of Clans, Clash Royales. They also own Fortnite and PUBG. So yeah, Tencent's such a cool company. They are Chinese though, but they're my favorite Chinese stock. Hey, that's what's up, Free Y. So how's it going, man? Venture Global VG stock. What up, Dash? Let's check it out. Yeah, sorry if I don't get to all the stocks here. Dang, so this one doesn't look so good. I feel they're up 17% on the day, but the stock's at an all-time low since they just IPO'd. So They have some project. They just IPO'd, so there's not too much data we can go behind. But the revenue is 1.5 billion. That they're making net. If you average out the 4 quarters, this is a niche company. I'd have to do some more research on this one. What do? They don't pay a dividend. Liquefied natural gas. So this is an oil and gas company. Oh, I need to do some more research on that one. What's your favorite international ETF? Oh, I forget the ticker symbol, but I just added it to my watch list. Maybe it was this one, VXUS. Yeah, if we go to VXUS right here, yeah, it was this one. Look, we were just talking about Tencent. Tencent's the largest holding. Someone was just saying SE. Yeah, these are all international stocks. So VXUS, it's run by Vanguard, is my favorite international ETF. It does not own any US stocks. So that's why you see Taiwan Semi, Chinese Tencent, SAP, Alibaba, Novo Nordisk, ASML, Nestle. So someone wanted me to look at SAP. So we can look at that one. SAP. So yeah, this is an international company, but wow, look, the stock's done great. So nice. Let's do some analysis on them. They have a nice dividend, which is cool. The PE is a little high. But what about the net income? So actually, look at that. They're making a lot of net income every quarter. They're pretty much making 1 to 2 to 3 billion of net income every quarter. The sales are growing up 10% year over year. So actually, this one they deserve to be going up so much. Um, let's see. Buy AMD, Apple, or Amazon rank. Yeah, I honestly I like Amazon right now. I might be biased. Again, none of this is financial advice, but I do own a lot of Amazon, and I have been loading the boat on them. I'll be really quick about why I like Amazon so much. I'll just show you the bottom line right here. They literally made 20 billion of net income just in the most recent quarter. If we zoom out, this company was sometimes losing money. They always reinvest in the company. Actually, you want to know how much Amazon reinvests in the company? Well, all you got to do is go to their cash from investing operations, and literally they spent $37 billion in the most recent quarter. They're just such a innovative company. Oh, my fault, Dan. I said SE, not SAB. What is SE? Is that a ticker symbol? Oh, it's SEA. Okay, my fault. Yeah, so here's SEA right here. So this is an insane growth company. I really like this stock. So check this out. We can see their active users. They have 618 million quarterly active users, which is pretty cool, but they're an e-commerce stock. So look at their e-commerce revenue. It is up 33% to a new record. So SC is a nice e-commerce growth company, and they're now profitable. They made literally 230 million of net income in the most recent quarter. Yeah, the sales are up 36%. Wow. So yeah, SC, that's an impressive one. I do like the growth there. Lucid stock. So, Lucid, I would avoid this one in my opinion. Don't buy the dip on them in my opinion, and I feel bad saying that. I know it's a popular retail stock, but here's why I'd stay away from Lucid. It's just because they literally burn so much money. Like they lose, let's see, that's 2.5 billion the past year they've lost, and the whole company is worth 7.7 billion. So they've lost over 30% of their company just in the past year in net income, and also they have diluted you 30% in the past year. What happens is, hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link here. It's the very first link in there. It's free. You can track like super investors' portfolios and stuff like Nancy Pelosi. She's been up to some shisty stuff. Hey, I appreciate y'all being here. I'd appreciate if y'all hit the like on the stream. I'm streaming on YouTube and TikTok right now. I am reading both chats. I'm reading both TikTok and YouTube chats. So anyway, let's keep going here. Thoughts on Ethereum right now? Hey, Ethereum. I don't own any crypto. I don't really look at that. Dang, what the? Let me actually go to Robinhood on this right here. Actually, don't believe it. Let me go to Ethereum. So this is why I'd be a little careful. Look at them in 3 months. Literally, this is actually where it starts to get scary. Literally, just in 3 months, Ethereum is down 54%. Now let's compare that to like a Bitcoin. Bitcoin's only down 19%. So in my opinion, Ethereum, I'd probably rather just own Bitcoin, or it's really high beta. So I mean, if Bitcoin does recover, Ethereum should recover more, but they're so risk to be down that much in 3 months. I mean, still look at us in the past 3 months. I mean, we're down 12%. Yeah, hey, I just like being completely transparent. Look at us year to date. We're down 11.79% year to date. Anyway, oh yeah, here's my main taxable account, by the way. This is my Robinhood portfolio. These are all my dividend stocks. Every stock in here actually pays a dividend, even Google and Meta. Oh yeah, we also have a Roth IRA with Robinhood as well. It's only $600. I literally own two stocks in here. I got it's like a 50-50 split. I got Kroger and I got Innodata. Oh, they're $1 apart. All right, anyway, let's go back to the analysis here. So is that, yeah, that brokerage, this brokerage right here is called Robinhood. If you want to get this one, it's the second link in my bio. Do you think there will be another dip? Probably, but I sure hope not. I mean, honestly, if there is a dip, I'm ready to buy the dip because, I'd rather buy the dip than buy stocks at all-time highs. So here's a very nice company. Here's Uber Technologies, and I love the growth and the profitability of Uber. So check this out. We can see their active users. They have 171 million monthly active users on Uber. That's crazy, but they're still growing. Look at their mobility revenue. It is up 25% year over year. So it's way past the pandemic. So people are still using and they're growing their user base, and also the delivery revenue. This is what's it called? Like Uber Eats. So the delivery revenue is up 21%. But anyway, the point being, look at the profits here. They're literally making 1 to 2 billion of free cash flow a quarter. The net income's even better. Actually, you really want to look at the operating profit. They had a little one-time adjustment. You see how it says they made 6.9 billion? They didn't actually. They made 770 million. But still, Uber, great company. Again, not financial advice. Uh, what does it mean if they pay you a dividend? Yeah, all that means is the company shares a little bit of cash with you. Actually, I'll be super quick about this. A dividend is literally just a cash payment. So like McDonald's paid me $23 just because I own the stock. So to qualify for a dividend, all you have to do is own one share of the company. Like Google pays a dividend, or you don't even have to have a whole share. You can buy half a share. So, yo, what's up, user 93? Yeah, sorry if I don't get to your stock. Try not to spam. We'll check them all out here. So, PNBK. So, let's see. Pacific Mercantile Bancorp. So, yeah, look in the top right. Please avoid this one. You see the market cap? It's only a $5.4 million company. So, I mean, I'm sure someone in here has a house worth more than that. So, I mean, I would please avoid this one. Let's see. Are they losing money? I mean, I can almost guarantee they are. They lost 26 million just in the most recent quarter, and the whole market cap's worth 5 million. So yeah, they're definitely going bankrupt. I would highly advise, not financial advice though, just stay away from that one. Don't buy it. What's the difference between stocks and crypto? It's just stocks are like a living piece of an actual company. Um, that they like if you own all the shares of a company, you now own all the net income and all the profits and everything. But if you own all the Bitcoin, you don't really get anything. I mean, actually, that's a weird way to look at it. Yeah, if you own all of a stock, you actually have left at the end of the day a company that produces net income and free cash flow. But if you buy all the Bitcoin, it doesn't really anyway, I don't know what I'm talking about here. So, let's see, Chinese stocks. Yeah, hey, I only like two Chinese stocks really. The ones I really like are Tencent and Alibaba. Let's go over Alibaba. I saw that one earlier. I didn't really get to it. So Alibaba's the Chinese Amazon. To be honest with you, I would rather just own Amazon than Alibaba, but this is a Chinese e-commerce. They're at a very low PE just because they're Chinese, 14 PE. How many active customers do they got? They got 903 million annual active customers. Wow. And they own AliExpress. Have you heard of that? Oh, hey, this is a brokerage right here. Yeah, RM. If you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. It's free. But look at the net income they're making. They made 6 billion this quarter, 6 billion the quarter before, 3 billion. So they're just printing a lot of money right now. So, yeah, I wonder how the tariffs will affect them, though. That's the big question. Best bond stock, yeah, BND is. I like BND because it just owns a little bit of every type of bond. It owns corporate bonds, it owns treasuries. So BND is cool, but also if you just want to own treasury bonds, just buy TLT, the U.S. 20-year Treasury bond. If interest rates ever go back to zero, and I believe they will one day, if interest rates are at 0%, this stock will no matter what be at over $100. I mean, just because it's the inverse. Anyway, um, let's see. So there's long-term investment. Yeah, we're really looking at like high quality stocks that you should buy in the long run. Like that's what I do. I don't really do any options or crypto. I mainly just buy and hold great quality stocks that I can trust in the long run. Again, I'm not an expert. Like, look at this stock right here. I'm down over $1,000 on this stock. So don't listen to me. I'm not an expert. Hey, but I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord. I'm just on here giving my opinion, and don't take it as financial advice. Yo, what about United Rentals? So this is a company that I do own. I'll show you that real quick. I might be biased when I do this analysis here, but I am in love with this stock right here. So I'm actually down 2.3% on them, but I want to show you why I really like this company. They have so much room to raise their dividend. So they have a 1.1% dividend, and the payout ratio is only a 16%. And the PE is super cheap. It's a 15 PE on United Rentals, and they have their general rentals. Yeah, they basically just rent stuff out from them. Like, look at their specialty rental revenue. I mean, this is some nice growth. I mean, that's up 30% year over year. So anyway, I just like this company. I mean, they're making like 5 to 600, 700 million of net income a quarter. They do buybacks. They do a lot of buybacks. They buy back like 3% of the company a year. Yo, Presco says, my first 1K, where should I put it? Again, not financial advice here, but I would put the majority of that in an S&P 500 ETF. I like VOO. That's my favorite S&P 500. So I'd buy first off VOO. It diversifies your money for you. Apple, Nvidia, Microsoft, Amazon, Meta, all these great companies that I use. Then I'd maybe buy some individual companies. I really like these. So again, not financial advice, but I like Apple, I like Amazon, Meta, Google, and I own these. So yo, what up? Every Pat said, this is a weird ticker symbol. So yeah, I type in ASBIS. I can't find that one, every Pat. So if you got another stock you want me to look at, I got you. I'm sorry, I can't find that one there. So yo, Tinderbox says PKB. So yeah, this is a home building ETF, and it has actually done very nice since 2019. If we look at their top holdings in here, it's Lowe's, Home Depot, a lot of the home builders, Train Technologies. So yeah, they have a nice dividend as well. Let's see. SPLG is cheaper Vu. Is it really? Um, let's see. What would you recommend to invest in right now? I don't really know, dude. To be honest with you, it's hard to buy today. Actually, if I show, here's just what I own. By the way, I'll just show you what I own. Again, I'm down 12% year to date, but it's hard to buy today. I am up 2.6%, but literally every stock that we own is up on the day. These are all my favorite companies. Every stock in here pays a dividend, like dividend growth, like Meta, Google, Salesforce, Constellation Energy, McDonald's. So yeah. Anyway, let's keep looking at some stocks here. What about Hims? So has anyone heard of this stock? They're kind of popular right now. Hims and Hers. Yo, what up, Bill? Yeah, I do really like URI. If the payout ratio is smaller than the inflation, does it make sense? No. I mean, I wouldn't focus on that. I would just like to see to see the payout ratio constantly stay low. So anyway, that's what I would look at. Anyway, here's Hims and Hers. They have no debt whatsoever. So this is a debt-free company, but look at the sales growth. This is what's so impressive about Hims, and they deserve all the hype. The revenue is up 95%, literally to a new record. So this is some incredible growth. And so are the profits. They're making free cash flow every quarter. They're making net income every quarter, and they have no debt at all. Let's see how much cash they have. They have 300 million of cash with no debt. So anyway, Hims, the only bad part is they can no longer sell their weight loss prescription. So they got FDA rejected. So I wonder how that'll hurt their future sales. That's the only bad news. Everything about them is amazing. ASML, yo, what up, Divo33? What's up, dude? So ASML, this is like the chip making manufacturer. They have like three main customers. It's like Intel, Samsung, and might be Nvidia. I don't know what the third one is, but here's why I actually find this one very attractive right now. They just had a record-breaking quarter. If we look at the revenue, is up 20% to 10 billion, and the net income was 2.8 billion. 2.8 billion's a record. They've never even made close to that. So they just had a record-breaking net income quarter, but for some reason the stock is not done too good. So maybe it was future guidance. I'm not sure, but I honestly I do like ASML. I also like TSM. They're a European company though, so you got to be careful because you there might be foreign taxes. I don't know. So yeah, hey, what up, user? So this one looks really risky. So VNRX, they're only a $46 million company. These kind of stocks I just avoid because it's literally like flipping a coin. These kind of companies are literally the most risky kind of stocks you can buy, where I just completely avoid them. Yeah, they lose money every quarter. The sales are literally 190,000. So you're not even buying a business here. You're buying just hope and momentum. So I just be very careful with that one. Yo, oh, hold on here. Yeah, try not to spam here. Hold on. I gotta fix that. There we go. Yo, what 1-5? Thanks so much for the heart there. I appreciate you, my friend. So, yeah, let's keep going here. Yo, what up? Gabe said MBLY. So let's see what this one is. Mobile Eye Global. So they're an $11 billion company. So they have a lot of market cap, but the stock is not done too good. So how's their revenue doing? So, this actually started to make more sense. The revenue's down 23% year over year. That's actually not good. So yeah, the revenue's down 23, and they're now losing net income. Yeah, I don't know how, but last quarter they lost 2.7 billion. Luckily they have no debt, But because of that $2 billion loss, look, their assets went from 15 billion to 12.8 billion. Their assets just declined. Yo, no way. Yo, Denise, that was so cool. Thank you so much, Denise. I really appreciate you. Thanks so much. If you got a stock you want me to look at, I got you. That's so sweet of you. Um, Thanks. Let's see. Yo, and Peter WY. Thanks so much for the rose, dude. So let's see. CTRA. Yeah, let's check it out here. So this is Coterra Energy. So let's see. They're a $19 billion company. Let's see. They must pay a dividend. Yeah, so they have a 3.3% dividend, and it's a very healthy payout ratio. It's only a 56% payout ratio, so they even have some room to raise the dividend. The PE ratio seems pretty fair, for an oil and gas stock, a 16 PE. Morningstar has this at a 28 fair value. We can actually see the individual analyst ratings for this, like if we wanted to. So yeah, John has this at 33. Anyway, all the price targets are higher than where it is today. So yeah, they just do oil, natural gas, LNG. So if we go to the net income right here, yeah, they're just making a consistent 200, 300 million of net income a quarter. Then they just pay a lot of that out in dividends. Now it is down 28% year over year, but all oil stocks look like that right now. All of their net incomes are down just because of the price. Yeah, they're printing free cash flow every quarter. So yeah, CTRA, not bad for an oil and gas stock. I do like them. Um, Let's see. Can you do HAG? Yeah, let's check. Yo, David, what's up, dude? Good to see you. Thanks for the little rose there, and Hogus, thanks for the chili pepper, dude. Thanks for all the roses. Yo, I'm looking up HAG. I actually can't find that stock. Maybe it's a different ticker symbol. I apologize there. But yeah, David, if you got a stock or Hogus, I got you. Let me know. We'll check them out. And yeah, Denise, if you got another stock, again, thanks for that. That was so cool. That little animation. I got you. Um, how do you feel about Zim? Okay, so. Wait, someone just said, what's the number one company you're invested into? Yo, what 1 5? I got you. You know what? We'll look at CSL. This is my number one company I'm invested in. I have $4,300 in this stock, and I'm down on the position. We're down 0.89%. But I'll be super, super, super quick about this because you've probably never heard of this company. But I really love them for this reason right here. So here's their net income. They're making, 100 to 200 million of net income a quarter. But here's what's so great about this stock right here. Um, the dividend only costs $45 million. So they have so much room to raise their dividend. They've been raising their dividend for over 48 years. But the best part is actually the total common shares outstanding. It's on the left here. So look at the total common shares. It's 44.4 million. If we go to 2019, it was, 56 million. So basically this company buys back. Look at the trend there. They just buy back so much of their own stock, and it gives you more ownership in the company. So CSL for me is a just super shareholder friendly company. They do so many buybacks and dividends. They repair roofs. So I I have so much. If you go to my YouTube channel, I've made so many videos about them. So anyway, let's keep going here. Check out. Oh yeah, I wanted to look at ZIM. Sorry, I forgot to get to this one. So this is a shipping company. All they do is literally they own a bunch of ships and they ship cargo across the sea. But they have a rule where literally whenever they make net income, 50% of that net income will be paid out to the shareholder in a dividend. So 50, like I said, their dividend changes every quarter, but sometimes they don't make net income and they don't pay a dividend. So basically, this company benefits from supply chain issues. So if you look in 2022, they had a $27 dividend. Then 2023 was $6. Now it's $4. So honestly, I like their competitor more. To be honest with you, it's a bit more consistent. I like DAC more than ZIM, if I'm being honest with you. But I don't really would want to own either of those. They're both like they're high dividend yielding companies. Uh-oh. That's not good. Okay, sorry. We're back. Um, let's see here. Can you do NAK? Let's check it out. NAK. Oh yeah, we can look at Micron Technology as well. So here's Northern Dynasty Minerals. They're a Canadian company. They're only worth 400 million. So they're a $400 million company out of Canada. And look, they actually are a revenue-less company. They have no sales, no revenue. They're losing money every quarter. So yeah, they must own a mine or something, or they must own some kind of high quality asset because look, they have literally no revenue and they're losing money. So I'd be careful with that one. Nothing's really blowing me away there to really want to buy them. But yeah, let's look at Micron Technologies. Again, none of this is financial advice. I'm just giving my opinion here. And I don't sell anything. I don't have a course book, WhatsApp, Telegram, Discord. I don't have any of that. I'm just on here to give my opinion. And watch out for people impersonating me. If you follow me, I really appreciate it. You might get followed by someone impersonating me. So watch out for that. Anyway, here's their compute and networking business. This is what's so cool about Micron. They are insane growth company. The sales are up 108% year over year. But here's the best part. If you go to the net income down here, they're printing net income now. If we zoom out to last year, a lot of people couldn't buy this stock. They were losing net income every quarter. So now they're making net income every quarter. You also get a nice little dividend. Uh, Morningstar has it at $100, $132. So they're like a Nvidia, AMD kind of competitor. I do like them. NAK is a developmental mining company. They'll be very big next year. Oh, go, that's cool, B9. That's what's up. Fran says, Amazon, what's your prediction? Will they acquire TikTok? That'd be very synergistic if Amazon could really acquire TikTok. You'd probably just see a lot of Amazon products in the TikTok shop. But I do love Amazon and simply because of the money they produced in net income. They literally made 20 billion just this quarter. That's a record amount of net income. So, you know, they have more than just their online stores. They own Twitch, they have their Amazon Web Services. Like, look at just their AWS Amazon Web Services. It's up 19%, literally to a new record. So Amazon's such a nice growth company. Oh, here we go. Rocket Lab. So RKLB. So this is a company that sends rockets into space, and they actually have a backlog of $1.3 billion of orders. So they have a lot of orders that they can't even fulfill yet. And if we go look at their space systems revenue, this is what I really look for in a company. This is some incredible growth. It's literally up 75% to a new record. So this is incredible sales growth on Rocket Lab. So yeah, that's what's cool about them. What? Oh, hey, yo, Zozo, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. Yeah, you can track like super investors' portfolios, like Nancy Pelosi's top holdings. But I wanted to look at Uber next. So, you UBER. So Uber, this is I'll be quick about this one, but I love the fundamentals here. They're still growing. This is a growing business. We can see their active users. Uber has 171 million monthly active users. Their mobility revenue, look at this. It's still growing. It's up 25% to a new record. Incredible growth. Same with the delivery revenue like Uber Eats. That's up 21% to a new record, and the profits are at a record. They're making 1 to 2 billion of free cash flow every quarter, and the net income's, even better. They're making like pretty much a billion, or they're going to be at a billion a quarter close to. So yeah, Uber's cool. Um, so Ford stock, or yo, what up? User 13 said ticker symbol F. So yeah, honestly, Ford, I would avoid this one. If you zoom out, the stock price is actually lower than it was in the year 2000. So if you bought a share in the year 2000, you're actually down on your shares, which is unfortunate. So you're not really going to outperform the market owning Ford. But what you do get with Ford is a nice dividend. They actually have a qualified dividend, and it's a 8.6% dividend yield. So yeah, they have a nice little dividend. But I don't know about them. Yeah, and honestly, here's another one. Someone kept saying Lucid. Lucid, please don't buy this one. They've literally it's it's pretty much a scam. They've literally diluted you 30% the past year, and they've lost 40% of the market cap in the past year. In my opinion, this one will just slowly keep on bleeding lower unless they get bailed out by the Saudis. But if you look in the top right, the market cap, this is a $7.5 billion company. And if you look at the net income right here, just in the past year, they've lost 2.5 billion of net income plus. So I would be very careful with Lucid. They just aren't profitable. They're losing so much money. So I'd be careful with that. Yo, Emmeline, thanks so much for the rose there. I really appreciate you. That's so kind. Um, yeah, what up, Tens? Yeah, hey, this is a brokerage right here. Yeah, if you want to get this app, it's a link tree in my bio. It's the very first link there. It's called Mumu. Um, so yeah, vanilla, I would not buy. I mean, you could buy XRP. I like stocks. I'd rather buy an Apple or a Google or an Amazon over XRP, just my opinion. Uh, yeah. Thoughts on NNE? Yo, what up, Ken? That's a nuclear energy stock. Actually, let me go to the nuclear energy watch list down here. So NNE, is that on the watch list here? Or there's NEE, which is Next Era Energy. So that's not on the watch list anyway. Let's check out NNE. So, oh yeah, I remember. This is Nano Nuclear Energy. So this company is actually a startup, I believe. So let me just double check this right here. So if we go to the revenue, uh, yeah, so you see how the revenue says no data. So they've never sold a product or a service or anything. They just have no revenue, and they're losing. So this is a startup. You're pretty much just buying a startup right here. So it's kind of speculation, but I'd rather buy a company that already owns some nuclear reactors. Actually, I actually own ticker symbol CEG right here. This company owns 50% of all the U.S. nuclear energy reactors. You're very welcome. Thank you. Hey, thanks so much, Emmeline. That's so kind of you. So yeah, here's my main taxable account, by the way. Yeah, we're still up 2% on the day. We're kind of falling. We were up 4%, but yeah, we're up 2% on the day. Here's my year to date, though. Again, I just like being transparent. We're actually down 12% year to date, but luckily we are up on every single stock on the day, so that's pretty nice. Um, so let's see here. Tesla, fine. We've looked at Lucid and Ford. We'll look at Tesla now. And Tesla's another one that they're profitable, but the valuation's too high. They're trading at over 115 times net income, and they're not really growing anymore. If we look at their automotive business right here, like this is the unfortunate part. The sales are down 5%, so it's hard to buy a high PE company that's not really growing. And look, we can literally see their total vehicles delivered, it's down 13% year over year. We can see the deliveries by model, it's kind of just collapsing. Same with the vehicle production, but there is some good news. So while the vehicle side of the company is doing terrible, look at it's only 10% of the revenue, but look at their energy business. This is like a hidden gem on Tesla right here. No one really talks about, but the energy business is up 112% year over year. Yeah, hey Nick, this is a brokerage right here. If you want to get this app or this brokerage, it's in the link tree in my bio. It's the very first link there. It is free. It's where I like to park my idle cash. Like if you look in the middle of my screen, earns you the nice little interest there. So yeah. Anyway, yo, what up? Nathan said PSTV. What's up, dude? So PSTV. So let's see. This is Plus Therapeutics. In my opinion, Nathan, I would avoid this one. If you look in the top right, you see the market cap. They're a $14 million company. So that's a very small market cap. Yeah, look at this stock. They're pretty much at an all-time low. So because of all the stock adjustments, stock splits. So let's see. Government contracts. So yeah, this is unfortunate. They have no more revenue. So yeah, if we go to the revenue right here, this was the last time they had any revenue was in 2020, and they're losing 4 million a quarter. They have more liabilities than they have assets. So yeah, please um please don't buy that one. Again, not financial advice. It could still go up, but I just can't trust my money with that one. Oh, here's a cool stock, Costco. Yeah, Costco. I love Costco because you buy stuff in bulk there. Consumers feel like they're getting a good deal, and they have a subscription model. You can't go into Costco without a subscription. Oh, and check this out. Here's another cool thing about this brokerage right here. It draws technical analysis for you. It says there's a bearish continuation triangle. Anyway, I don't really like to do too much technical analysis. I like the fundamentals. Like, let's see the net income right here. Look at this. They're just making 1 to 2 billion of net income every quarter. The revenue is up 9% year over year. The net income is only up 2.5, so their margin actually did fall, which wasn't great, but still, they're so quality. I really like them. Should I use Cash App stock for stocks? I would not use Cash App. I don't know what the fees are. Yeah, I'd avoid that one. Why do you use Moomoo and Robinhood? Yeah, hey, if you want to see why I use these apps, I have a video where I compare all them. I just like having multiple brokerages. There's no harm in having multiple brokerages. It's literally just an extra sheet of paper. It's an extra filled out sheet of paper you just hand over. So, I already get a 1099 from PayPal, Google, so no big deal to get one now from Moomoo and Robinhood. Anyway, let's keep going here. Yeah, if you want to get this brokerage right here, it's in the link tree in bio, very first link there. Uh, you know, uh, and I just like those apps. Even if these, like, let's say Robinhood goes bankrupt, it's, you're still FDIC insured, or, anyway. This is a very cool stock right here. Ticker symbol TKO. So TKO, there's some more and technical analysis. There's a bearish continuation triangle on them as well. Anyway, this is such a unique company. Check this out. They own the UFC and they own the WWE, Worldwide Wrestling. So this is a very cool company. They can license out their content to a bunch of people. So yeah, the stock's done great as well. I wonder what the valuation is. I think the valuation is really high because they just went uh, net income positive. But yeah, I don't know if I'd buy them, but they're a unique company. They're on my watch list. Um, Dude, invest all your college fund. You're coming. Yo, what up, Muhammad? Good to see you, friend. Um, Spy versus VOO, which one would you recommend? It honestly doesn't matter, but I'd personally, if I had to pick, I'd just pick VOO. If you're looking to buy the S&P 500, in my opinion, this is my favorite ETF to buy the S&P 500. Again, it just breaks your money up for you into all these great companies, Apple, Nvidia, Microsoft, Amazon, Meta, Google. So yeah, VOO is my personal favorite. Heard they're going to be a boxing division as well. Really, AK, that's pretty cool. 27. Thoughts on D05? Is that a stock, Hogus? D05. You know what? I'll type it in for you. This might be it. I think we found it. I don't know what this is, but we'll find out together. What do they sell? Consumer banking, institutional banking. Well, let's see the bottom line here, the net income. So in the full year 2024, they actually made 8.3 billion of net income. That's quite impressive. So it looks like this is a bank. I'm not sure. This is some random country. I'm not sure what country this is. I could find out really quick. Asia, so they're in Asia. So actually, if we go to markets right here, so yeah, okay, yeah, all we gotta do is click on the market to see where the revenue comes from. I'm noticing none, they're not in the U.S. at all. So yeah, it's kind of like a Chinese bank or something. They are making a lot of money though. Ooh, here's one ticker symbol Hood. So this is Robinhood stock right here. So this this brokerage right here, Robinhood, is actually publicly traded, and this is their stock right here. So I do own a little bit of their stock, so I might be biased, but we can see their net funded accounts, 25 million. But here's the best part about this: the revenue. Look at this. The revenue is over a billion. It's up 115% to a billion of revenue, and the net income is positive now. If we zoom out, no one took Robinhood serious. They were losing so much net income every quarter. Now they're making net income every quarter. So yeah, I personally like them. I'm looking to buy more of them. Uh, Hey, yeah, hey, no problem, homie. Yeah, I like doing it on the phone. Is Nvidia a buy? You know what? What up? Let's check out Nvidia. I have not looked at Nvidia once today. So you know what? I'll give you a quick analysis on Nvidia. They're at $100 now. So Nvidia's back over 100. Let's hope it can hold that. So here's why I like Nvidia. Look, they have a huge PC GPU market share, an 18% market share, and their automotive revenue keeps on growing as well. Yo, user focus. This is a brokerage right here. If you want to download it, it's in Linktree in bio, very first link there. It's free. So their automotive revenue keeps on growing. They partner with WeRide and GM and Cadillac. And look at the net income. This is honestly the best part. The net income is up to 22 billion. Until this net income goes down and goes away, I wouldn't sell Nvidia. They're just so quality in my opinion. So again, not financial advice, but I'd like to buy them sub 100, but I honestly think they're a decent buy right now. Again, if you're going to buy something, here's again not financial advice. This is what I recommend to dollar cost average. It's a more patient approach. You slowly buy into the stock instead of spending all your money at once. And if you look right here, just because you dollar cost average, you could still lose a lot of money. So make sure you're buying into a high quality stock. So yeah, also we were speaking of Nvidia. Nvidia owns some individual companies. Remember their automotive business? Well, Nvidia is partnering with like WeRide, for example. This is like a Chinese autonomy vehicle company. I would avoid this stock. Don't buy them. You can just get exposure through the Nvidia stock you own. But look at this. Nvidia took a stake in it. WeRide stock goes to $40 and it's literally at $9 now. So anyway, yo, what up, Clips? He said BNC. What up, dude? So BNC is this the Canadian stock? I don't know if this is the one you're talking about, Clips. Let me know if this is the one you're talking about. I don't think it is. Might be. You know what? It's an ETF, so it just owns a lot. Actually, yeah, look at that. It owns a lot of Canadian financial stocks. It probably is what you're talking about. Royal Bank of Canada, Bank of Nova Scotia, Canada. So yeah, basically a lot of financial Canadian stocks, and it's an ETF. That's actually pretty cool. Ooh, here we go. Someone said Alibaba. So Alibaba's my second favorite Chinese stock, so I do like them. So here's Alibaba right here. This is a Chinese company. They're basically the Chinese Amazon. They do what Amazon does. But I'd rather own Amazon to be honest with you, but I wouldn't mind owning this one. They have a 15 PE, so of course they're trading at a low valuation because they're Chinese. You see their active customers. They have 903 million annual active users, and but look at the bottom line here. The net income was 6 billion this quarter, 6 billion the quarter before, another 3 billion. So they're just super profitable. Same with free cash flow. Literally this quarter they made 9.7 billion of free cash flow. So Alibaba's pretty cool. They look at that them the past couple weeks here, falling on the tariff news. They're down 5. They're down 5% today, when all U.S. stocks are pretty much up today. Yo, what up? No, he said. He said SoFi stock. Oh, I forgot I have my tea next to me. Forgot about that. It's gonna go cold. Probably is cold. Anyway, here's SoFi Technologies. This company, I own them, by the way. I love them for their growth. Look at their financial services revenue. It's up 85% year over year to a new record. So this is incredible growth. Yeah, what happens? Hey, this is a brokerage right here. Yo, Joven, yeah, if you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. Yeah. Um, Let's see. So yeah, the financial services is at a record. And also look at the net income right here. The net income was $330 million. If we zoom out, they used to lose net income every single quarter. So they've really turned things around. They're now really profitable, and I do like them. So let's see here. Why do you use Mumu? Yeah, this app, I love this brokerage right here for all the analysis you can do. Like you can track, of course, like the super investors portfolio. And I like to just keep my cash in here. It earns you the nice little yield. So yeah, if you want to get this brokerage, it's in the link tree in bio. It's the very first link there. It is free. There's no like monthly fees or anything. Anyway, here's SAN. So what up? Yeah, my fault, Clips. Let's check this one out. SAN, Banco. So they're a $88 billion company. Wow, so they're a huge company. So they're a European company, so we'll switch the revenue to US dollars. Yo, Andy, what's up, dude? Thanks so much for the ghost there. Yeah, dude. Boy, oh boy, we a hit we took. Yeah, dude. I'll show you my portfolio in a second here. But look at SAN. Yeah, they're making 3 to 4 billion of net income every quarter. So they're very consistent with their net income. You get a 3.4% dividend and it's completely sustainable. So yeah, for a EU company, I actually really like this one, but is also a bank, so it's an EU bank. Pretty cool. So yeah, by the way, I just like being transparent. Here's my Robinhood account, by the way. Check us out year to date. Yeah, Andy, check us out. We are down 13% year to date, but it's not too terrible. So we're down 13%. But now if we go to the QQQ right here, the QQQ is down 16%. So we're doing slightly better than the Qs, but what do you like about Robinhood? Yeah, Robinhood's just a very simple platform. So yeah, this brokerage right here is called Robinhood. They make I don't do options, but I have done them before. It makes options really simple. And also another cool thing, I have my Roth IRA with Robinhood. They even have a match program, like you see in the middle, how I've contributed $211. They match me $6. So yeah, if you bridge, it's in the link tree in my bio. It's the second link there. I like this one too, but I like this one the most because of all the analysis you can do. Like someone said, ooh, Intel stock. So let's go do some analysis on Intel. There we go. Sorry, we're back. So let's go do some analysis on Intel right here. Again, to be honest with you, I'd rather own AMD or Nvidia or honestly Taiwan Semi. But look at this. Here's what's great about Intel. They have this huge market share. They have a 65% PC GPU market share. You know, they sell the clients, the data center. How's their data center business doing? Oh, well, anyway, the thing is with Intel, I don't like them because they're kind of burning money. I mean, you look at the numbers and you can draw your own conclusion. Look, in 2021, they were literally making 20 billion of net income a quarter. Well, for the full year 2024, they actually lost 19 billion. I mean, 2023 they only made a billion. So in my opinion, Intel's a little uninvestable. I mean, look at the free cash flow right here. I mean, they're burning free cash flow every quarter. But that's also why the stock has done so bad. It's lower than it was in 2014. So in my opinion, they just lose so much money. I'd rather just buy an Nvidia or something else. But that probably wasn't too helpful. Sorry there. Um, let's see. Yo, what? Brandon said EXE. Is that a stock here? Someone said what kind of tea? Yo, this tea is probably gonna sound gross. I have some ginger turmeric tea next to me, and it's pretty good. It's like earthy. Anyway, this is a $23 billion company right here. And let's see, what do they do? So they're a natural gas company. So LNG, they have a 2.2% dividend yield, but it says it's negative. So that means their net income must have went negative. Ooh, so yeah, I'm not sure what's happening with this company, but look, they just lost 400 million in the most recent quarter. Yeah, that's real. They really did lose that money. Maybe they did an acquisition because look at their assets. Their assets just exploded up. So maybe it was like a one-time adjustment. But huh. I mean, the stock's done pretty decent. I don't know. I need to do some more thoughts on them. Yo, Mango, what's up? What's up, Sauce Mango? How's it going, dude? Um, can you go over Meta? Yeah, dude, Meta, dude. I own this one, by the way, but I really like Meta. I got you, Nick. So the thing with Meta, they have a lot of active users, and the PE is very fair for Meta. Look at this. They have a 21 PE, which is historically very fair. And look at their active users. They literally have 3.35 billion daily active users. So half the world is on one of their apps a day. They own Facebook, Instagram, and WhatsApp, and some other apps. But the best part about Meta is the bottom line. They made 21 billion of net income just in the most recent quarter. That's a record amount of net income, and it's expected to keep on growing. Look at their cash from operating activities, 28 billion, up 44%. So anyway, Meta, in my opinion, is a great buy and hold for the long run. They have high margins. They have a 44% net margin, which is ridiculous. Dang, look at that. Meta was up to 540 and now it's at 518. We are only up 4% on my Meta, but yeah, here's us year today. We're down 13% in here. So anyway, oh, Rolls-Royce stock. So let's check them out. RYCEY. So yeah, did y'all know Rolls-Royce was publicly traded? And Rolls-Royce is actually they're not just a car company. They sell engines and aerospace products. So check this out. Civil aerospace is, half their business. Then they're in defense, power systems. So that's what's kind of cool about them. And for the full year 2024, they made 3 billion of net income. It's not too much, but 3 billion is pretty good. I mean, this app is telling me there's a double top, but that's technical analysis. Anyway, Rolls-Royce, not too bad there. Yeah, so someone said please MSTY. So honestly, this is one I would avoid. I mean, you only buy this ETF if you're looking to maximize your income. So look at them the past year. This is just not the kind of stock I'd want to own. Literally in 1 year, this stock is down 50%. So yeah, you get the nice dividend, but you lose a lot of stock price appreciation. It's pretty much at an all-time low right now in terms of stock price. So it that's because it has like 100% dividend yield. If you look at the yield on it, it has like 100% dividend yield. That's why. Anyway, um, you won't. It's just you buy that to maximize dividend income. I don't think you'll outperform the market owning that. It's also you get a non-qualified dividend when you own that, so you pay a higher tax on that dividend income. Anyway, so someone said Coca-Cola. So that is a classic Warren Buffett stock. So let's check out ticker symbol KO right here. This is Warren Buffett has a lot of the nice little dividend stocks, the higher yielding ones. So check this out. Coca-Cola has a 2.8% dividend and they slowly grow it every year. I mean, you can't go wrong. They own Coca-Cola, Sprite, a lot of brands, Smart Water, and they own Body Armor. The net income's up 12% year over year to two. They just make 2 to 3 billion of net income a quarter. Yo, Ed Brandon, thanks so much, Brandon. Thanks for the 5 dinos, dude. That's so nice of you. I really appreciate that. Yeah, if you got another stock you want me to look at, Brandon, I got you. We'll check it out. I appreciate the little roses there. Hey, Inspector, this is a brokerage right here. If you want to download this app, it's in the link tree in my bio. It's the very first link there. Rolls Royce are bringing back their dividend. How are you? Hey, what up, Roy Shop? Good to see you, man. That would be cool if Rolls Royce brought back the dividend. So yeah, I have multiple brokerages here, but this is my favorite one. First link in bio. So let's look at HAL. What is this one? So here's Halberton. Yeah, let's check it out. So we can look at Sprouts Farmers Market as well. I do own that one. But here's Halberton. So the stock has not done too good, actually. What industry are they in? So completion and production. So yeah, look at the sales. The sales are lower than it was in 2019, which is not great. What about the drilling? The drilling revenue is doing pretty good. So this must be in the oil and gas industry. But actually, the revenue is not bad. I mean, the bottom line, this is net income. They're making 600, 700 million of net income every quarter. Yeah, hey, this brokerage is called Mumu. If you want to get it, it's in the link tree in bio. It's the very first link there. Yeah, try not to spam. I got you, Mats. Um, how do you check Nancy's portfolio? Yeah, you just go to the insights and then you can see Nancy's top holdings right here. Let's see what she's been up to. She's been buying like Disney, PayPal, Interactive Brokers, American Express, a lot of those. Nvidia, her largest holding is just Apple and Amazon. Hey, I got some Amazon too. Let's go. So let's see. Ooh, Nara, what's up? SCHD. This is a nice dividend growth ETF. So yeah, if you're looking for a dividend growth ETF, I actually like SCHD. They have a 4.2% dividend, and they own a lot of the higher yielding names like Verizon's the largest holding, then Coca-Cola, ConocoPhillips, Pepsi, Chevron, a lot of the Warren Buffett type stocks. So yeah. Um, Let's see. Lois said ET. So energy transfer. So I'll be quick about this. This is technically not a stock. It's an MLP, which is a master limited partnership. So if you buy this stock, which is technically not a stock, if you buy units of this, you actually get a K1 tax form at the end of the year, not your typical 1099 form. So this stock is very unique. Basically, what I'm trying to say is they give you a complicated K1 tax form at the end of the year if you own this stock. So unless you're putting over like $1,000 in this stock, I wouldn't buy it. You buy it for the nice dividend. You have a sustainable 8% dividend, but you get the K1 tax form. And I accidentally bought one when I first started investing. It cost me $400 with an accountant. So, yeah. Yeah. Oh, what up, user 82? Yo, for 200K, yo, I would put most of that, again, not financial advice here, but if I had a lot of money, I would just slowly dollar cost average into the S&P 500. I wouldn't really, with that amount of money, I wouldn't risk around with some individual risky stocks. I just buy VOO, the S&P 500. It breaks your money up for you into Apple, Nvidia, Microsoft, Amazon, Meta, Google, all these high quality companies that I use every day. So let's see. Um, DVN is that? Oh, there was another stock I wanted to look at here. Yo, what up? Good morning, Shahir. We can look at Enbridge. I missed it. There was another stock I wanted to look at, but here's Devon Energy right here. The stock's actually done not too great, but that's just probably the price of oil that's doing that. They have a 5.2% dividend yield. So yeah, these higher yielding dividend or the oil and gas stocks usually have the higher yielding dividends, which is pretty cool. And look at this, they're making net income every quarter, like 600 million every single quarter, which is pretty cool. So yeah, Devon's cool. They have a 5.3% dividend. So yeah. Um What bonus? Yo, we both get some stocks, mats. SPY. Yeah, the SPY and VOO are the same ETF. So, oh, yo, she here said, I like the dollar cost on the QQQ. Yo, here's oh, yeah, it was Sprouts Farmers Market. You're right. Thanks, Yi. In my opinion, never buy QQQ. Buy QQQM. I promise you, not financial advice, but it is the exact same ETF. It's the exact same NASDAQ 100 strategy run by the exact same people, but with a lower expense ratio. Of course, you probably never heard about it because the people at Invesco, they market QQQ because of the high expense ratio. Why would they market QQQM? They don't do that. So in my opinion, I dollar cost average into QQQM. Yeah, hey, this brokerage right here is only available for the US, Canada, and UK, I believe. So maybe it might not be in the UK. So I don't know. Yeah, if you want to download this brokerage though, it's in the link tree in my bio. It's the very first link there. It is a free brokerage, track like super investors portfolio and stuff. So, and I love all the analysis you can do. Like, oh, someone had said Apple just a second ago, and then we'll look at Sprouts Farmers Market. So I'll just analyze Apple real quick. Gosh, their ticker symbol AAPL. There we go. So Apple's kind of on a discount right now. Look at them. Literally last month, this was a $230 stock. Now it's $180. And here's what's so cool about Apple. Look at their smartphone market share. They have a 23% smartphone market share. Most of the revenue comes from their iPhone. Then they have their services, then the wearables like the AirPods and the iPad. But here's what's really cool about Apple, the services business. Whenever you buy something in the App Store, Apple takes a 30% fee on that money. So if you go buy something in the App Store, spend $100, $30 of that just goes to Apple as a fee, which is crazy. But here's also why Apple's not doing so good. They're very Well, sorry, we're lagging here. Anyway, we're back. Sorry. Anyway, this is why Apple's kind of fallen so much recently. A lot of the revenue actually comes from outside the US. Only 36% of Apple's revenue comes from the US. Then they're in EU, they're in China, all these other countries. So they're probably going to be heavily affected by tariffs. I'm not sure. Or if other countries tariff us, retaliatory tariffs. I can't buy QQQM, not from America. Oh, okay. That's all right. What's better, SPY or QQM? I like both. That's the S&P 500 and the Nasdaq 100. It's like both are so great. I mean, I can't just pick one. So honestly, the answer is both. They should both perform pretty similarly, but QQQM should do a little better. Oh yeah, well someone was saying Sprouts Farmers Market. I kept forgetting to look at that one. So yeah, I actually do own this company. Check this out. So SFM, if anyone's heard of Sprouts Farmers Market, it's like a healthy grocery store. I do own 7 shares of this stock. And why I like them is because check this out, they're just growing their net income. Net income is up 59% year over year. So the net income is growing very nicely. And yeah, they don't pay a dividend or anything, but they do stock buybacks, which is pretty cool. Oh, hey, thanks, Jello. Appreciate that. Yeah. So not in UK, unfortunate. So you think now's a good time to invest in Apple? Yeah, I think right now, not financial advice is a decent time to dollar cost average into Apple. Dang, look at this. I need to change the title of the stream. The market is not recovering. We are actually going negative. I mean, we're still up 1.3% on the day, but yeah, looks like the market's having a little oopsie doopsie right now. Oh yeah, we were just looking at Papa John's. Has anyone heard of Papa John's Pizza? Unfortunately, this company's about to go bankrupt. They're only worth $1 billion and they're at an all-time low right now. Unfortunate. What do you recommend for a beginner? I don't even know where to start. Yo, honestly, again, not financial advice. I would just put most of your money in the S&P 500 or VOO. So as the backbone of your portfolio, then maybe play around with some individual companies, maybe like a Amazon or Google, Apple. Sorry. So here's a really cool stock right here. This is Take-Two Interactive. If anyone's heard of Rockstar Games, GTA 5, The Sims, Red Dead Redemption, all those games are owned by Take-Two right here. And as you know, GTA 6 is about to come out and it's supposed to be a huge revenue driver for Take-Two because right now the financials are really bad. The revenue is actually down 0.4%. But whenever GTA 6 comes out, it's supposed to be a real revenue generator for them. So that's pretty cool. Yo, what up? Kosa said MRVL. Yeah, sorry if I don't get to all the stocks here. I try to get to all of them. I really appreciate y'all though. Yo, I'm streaming on YouTube and TikTok right now. Yo, if you say any stocks in the YouTube chat, I will for sure see it first. But hey, if you want to subscribe to my YouTube channel, it'd mean the world to me. By the way, I don't sell anything. I don't have a book, course, Discord, WhatsApp, Telegram. All I have is a YouTube channel and a TikTok. My YouTube channel is called Nathan Roberts in the link tree in bio as well. Anyway, let's look at Marvel Technology. So here's what's cool. They actually made net income for the first time this quarter. If we zoom out, they used to burn money every quarter, but now they actually made 200 million, and that's real profit in the most recent quarter. So they had a really good quarter. They beat on every metric, but I think they gave some bad guidance or something because the stock fell. I'm not actually too sure, but I do. As long as they can keep up that net income positivity, I do like them. Thoughts on Meta versus Spy? Thinking of waiting Spy. Spy is definitely the safer bet, because it's the S&P 500. But yeah, if I had to pick one, I'd probably just pick the Spy. But yeah, Meta is a good chunk of that. Meta's 2.5% of the whole entire market, S&P 500. Yeah, if you have money in the S&P 500, 2.6% of that's in Meta. Um, let's see. Procter Gamble. Yeah, this is such a safe company. Procter and Gamble. They own so many multi-billion-dollar brands. And here's the cool thing about Procter and Gamble. You also get a nice dividend, a 2.5% dividend with Procter and Gamble. They grow their dividend every year. The valuation's pretty fair, a 25 PE on them. We can see their like organic growth versus their volume growth or whatever. But yeah, look at how diversified that they are. Home and fabric. I think they own Tide. Um, they're in beauty, healthcare, grooming, so they're in like pets or whatever. And look at that. They're making 3 to 4 billion of net income every single quarter. So that's what's up. Yo, what's up? Azon said SoFi Technologies. Yeah, dude, I love SoFi. This is a fintech. So I moved your YouTube from TikTok. Hey, yo, Spike, I really appreciate you for coming to the YouTube stream. So yeah, here's SoFi Technologies. I really like this one for the growth that they have. So they do lending. They also this is the best part, their financial services revenue growth. Look at this. It is up 85%, literally to a new record. So SoFi is an insane growth company, and they're also growing their profits. A lot of people didn't take SoFi seriously. Look, they were losing so much net income every quarter. Now SoFi is making net income every quarter. So that's what I like about them. Ooh, yeah, what up, Drew? He says OXY. This is a classic Warren Buffett stock. So, if we go to Warren Buffett's portfolio right here, where is it? OXY. Look, OXY is 4.2% of his portfolio. So yeah, this is an oil and gas stock. They're like a clean energy stock. They have some very nice assets. Look, I guess if you're looking to buy it, now it looks like a pretty attractive time. Let's see. Oh, look at that. We can kind of see realized price. I haven't really ever looked at this company. Net volume sales per day, 1.46K per day of sales. I don't know. Oil. So yeah, they're in the oil and gas. They're in chemical. How's their chemical business doing? Anyway, I just want to look at the bottom line here. Let's see net income. So they had a one-time adjustment making their net income go negative. It wasn't actually negative. They usually just make 1 to 2 billion of net income a quarter. So yeah, Drew, I actually do like Oxy. You also get a 2.3% dividend. So yeah. Yo, what up, Benjamin? I disagree. Hey, yo, what did you disagree with? I'm actually curious. I don't remember what I was talking about. Um, when's a good time to buy Nvidia? Hey, I think under $100. I mean, a good time to buy Nvidia was yesterday, but under $100 seems pretty fair. Yeah, no problem. So I was saying on TikTok, S&P 500 is 10%, and the Nasdaq has 14% of what I was reading. Yeah, you're right. The Nasdaq outperforms the S&P 500 in the long run because it's more tech heavy. You're right. Yeah, QQQM or QQQ does perform a little better than the S&P. So I'll give you a quick analysis on NVIDIA. Look at their GPU market share. They actually have an 18% PC GPU market share, and their automotive revenue keeps on growing. NVIDIA partners with WeRide, GM. But the best part about NVIDIA is the net income. They made 22 billion just in the most recent quarter. Incredible. Landon, I'd much rather own NVIDIA than Intel. I'd kind of stay away from Intel, to be honest with you. They're kind of losing a lot of money right now. So another cool thing is someone was saying, I don't know if he still wants me to look at it. I don't know if he's still here. Someone was saying Nebius stock earlier. I don't really like that company too much, but Nvidia owns a lot of individual companies, and Nvidia, one of the stocks they own is Nebius. And remember how they were partnering with autonomy vehicle companies? One of those was WeRide. Nvidia partners with WeRide. So trying to build up their automotive business. So yeah, Nvidia just prints money. Yeah, 22 billion just in one quarter. I mean, I don't believe it. Can you check realty income? Yeah, dude. So realty income, this is known as the monthly paying dividend stock. So they actually pay you a monthly dividend. They're in the S&P 500, and they have a $47 billion market cap. They get 6% dividend yield. What app are you using right now? Hey, all that this app right here is this brokerage is called Moomoo. It's in the link tree in my bio. It's the very first link. Yeah, this one right here is my main brokerage. Link tree in bio, first link there. Um, so Berkshire Hathaway, yeah. So BRK, Berkshire Hathaway is Warren Buffett's company. So yeah, you can buy them individually. So Berkshire Hathaway owns a bunch of every single or a bunch of different sectors. Like they're in insurance. Have you heard of Geico? They own Geico. They own manufacturing, Pilot. They own a BNSF, railroads. What was the monthly paying dividend stock? Yeah, that was Realty Income. Literally ticker symbol O. They pay you a monthly dividend. They're a real estate company. They do triple net leases. Um, they're pretty cool. You're not with that. They have a 6% dividend. You're not going to Apple from the market owning Realty Income, but you do get the nice monthly payment, which is cool. Check American Airlines. To be honest with you, I don't love the airlines. Airlines will get smoked in a recession. People just won't fly and won't spend on those. Like look at this stock all time. It's literal all time low. American Airlines has never been lower, even back in the year 2013. So yeah, I would just avoid this, just not a sector I really want to be in. Same with the cruise lines. I don't really like the airlines and the cruise lines. Uh, what do you think about Walmart? Yeah, WMT. Yeah, I like Sprouts Farmers Market, and I also like Walmart as well. So yeah, check this out. Walmart stock. Let's see. They're pretty close to it in a recession because people still gotta go to the grocery store. They have a 1% dividend, but the best part here is, they own Sam's Club. If anyone's heard of Sam's Club before, it's like a Costco competitor. I love the subscription model, but also they just make literally 5 billion of net income every quarter. So like 20 billion a year. Would you buy VYM or SEHD? If I just had to pick one, I'd pick VYM. SEHD has a higher dividend yield, but will grow less. So me personally, I like VYM more. Yo, Infinity Cube, what's up, dude? He said AAPL. Yeah, we'll give a quick analysis on Apple. I do like this stock. Yo, we'll look at McDonald's as well. What up, Azon? Yeah, we'll look at McDonald's as well. I love McDonald's as another recession resilient play. So Apple is really getting hurt by tariffs right now. Literally a month ago, this was a $250 stock. Now it's 180 bucks, and that's because they're super internationally diverse. Only 36% of Apple's revenue comes from the US. 25% EU. So retaliatory tariffs will very much hurt Apple. But here's what's cool about them. Besides tariffs, I love the iPhone. I'm on an iPhone right now. A lot of people are locked in the Apple ecosystem, and their services business is very cool. Whenever you buy something in the App Store for $100, Apple just takes a 30% fee on that. It's crazy, and it's all high margin for them. They made 36 billion of net income. So yeah, I do like them. Oh yeah, if we go to my main taxable account, by the way, yeah, here's my main Robinhood portfolio. We're barely up on the day low. Dang, we're at a new intraday low right now. Yo, drop a like for me. I'd appreciate that. But someone said McDonald's. Yo, here's what's so cool about McDonald's. If you look in the year 2008, every other company fell and was dipping, but not McDonald's. McDonald's actually held up great. They opened new stores. In a recession, people still got to eat, and people will go to McDonald's more in a recession. People aren't going to, this is the truth. McDonald's is better priced than Wendy's, Chick-fil-A, Subway. McDonald's is the best value fast food place. And y'all see the McDonald's Minecraft meal? That stuff, I just got one the other day. It was so cool. Anyway, should help drive U.S. sales. McDonald's is really a royalty and real estate company. Yo, hey, thanks, Spike. I appreciate you. So yeah, McDonald's, I like them for the dividend as well. McDonald's has a nice dividend growth rate. So yeah, anyway, that's the stream. I appreciate y'all being here. I gotta go. Because between us, McDonald's isn't a fast food company. Yeah, yeah. McDonald's. Whenever you spend $100 at McDonald's, at any McDonald's you go to, $4 of that goes back to the stock as a royalty, which is pretty cool. And they also own the land under a bunch of the stores. So each franchise is actually a tenant as well. So anyway, y'all are the best. I'm gonna go ahead and end the stream here. Hope you have a great rest of your day. Good luck out there. Let's hope the market recovers. Look, we're at a new intraday low right now. So yeah, see y'all later. Thanks so much for coming to the stream. Yo, we're gonna be live tomorrow for sure. We go live every day. So we'll be live tomorrow.